Peter Eliades with you again. This is Stock Market Cycles Update, Thursday, June 11th. We did a special update today, earlier today. Most of you, in fact, all of you that are subscribers should have been notified of that special update, giving downside projections and telling you what would happen if we got down to those projections and stopped, or what would happen if we got down there and started to get even lower projections. But the chart that I'm showing you now is one of the reasons why you should have this software. I don't look at every index with every offset every day. And in fact, remember, I've been away for almost a week prior to the last day or two visiting my beautiful grandson in Phoenix, Arizona. But while I was gone, a lot of things happened with a lot of the different indexes, and I didn't keep up with all of them. And this is one reason why you should keep up with the indexes. We'll show this to you in a minute, but let's first go through these programming notes for what's going to happen with the updates now. This is going to be the last regularly scheduled YouTube update for Stock Market Cycles. Will we continue to do some free YouTube updates in the future? Yes, we will. And as I mentioned yesterday, probably at a frequency rate of, 3 to 4 a month would be my guess. So maybe once, on average of just under once a week, something like that. In fairness to people that will now be paying for these video updates, and to see them virtually on a daily basis. I think we're going to guarantee something like 200 updates a year for those who pay for the updates. And there are 252 trading days in a year, so that covers a good part. Probably 80% of the trading days will have updates included. But what's going to happen from this point on is those of you that might not be interested in paying for the updates, and I can understand that. I don't understand it if you're a serious trader or a serious market analyst, because I would think these updates would be invaluable, but you obviously choose to spend your money as you choose to spend it. So if you choose not to spend it on the updates that we will be doing on our website, then we'll still be doing these 2 or 3 of them, maybe 4 of them a month. And you'll be able to check in and see what the projections are showing on a far less frequent basis, okay? But starting tomorrow, Friday, the update will be recorded on the stockmarketcycles.com website. Now, you will have an additional 2 weeks of free updates if you go to the website, register there, and click on the 14-day trial for the video updates. There are other options. You can actually get the TradeStation platform software and the updates in a bundle package. But all of that is explained on the website at a bundled discount, nicely discounted package, I might add. So there are certain options that are being offered on the website that you will see when you go there, stockmarketcycles.com. So that's a quick wrap up in terms of what's going to be happening to these updates now. There will not be a free YouTube update. I've been doing this free, folks, for virtually 9 months now. I work probably, ask my wife, I'm not a kid anymore. I probably put 10 or 12 hours a day into market analysis. I have not charged a penny for these updates, so I don't want to hear any sob stories about them. How many of you out there work for nothing? Raise your hands. Anyway, this is the way it's going to be. Go to the website, find out what the offers are there, stockmarketcycles.com. And in the meantime, we're going to take a quick look at the market. This is why I say you need to look at all the indexes, okay? As I said, I've been away, and this is the first day I looked at the Dow. These are closing price projections for the DJIA. And guess what? Look at this. 2 days ago, just before the decline started, the DJIA closed within its nominal 10-week projection window. Let me show you the web chart on this. This is a 5-week offset. And let's blow it up and look at a real big web chart, because they're really pretty charts. Okay, there you go. Let's move it over a little bit so you can see. Well, we got to make it smaller again. I want you to be able to see the low and follow it up. So here's the low down here on March 23rd. Now again, let me explain these continuum periods for you. This is an offset of 24.2 right here. This is an offset of 27.6. So when I speak about the continuum, what I talk about is, imagine this offset being moved very slowly to the right, okay? Little by little to the right. And we'll make this a closing price chart because these are closing price projections. What you want to find is the highest point that would have been generated and the lowest point within that continuum. Where would the highest point be? Well, the highest point would obviously be right here, just before you reach that closing price top. So if we had moved, if we had, within the continuum, if you had come just before you reach this top, that crossing above right there would have determined the upper part of this projection, which is 29,893 and change. The lowest part would have, well, the computer knows better than I do. It looks like it would have happened right down here, but it's hard to say for sure because it's really close in and around here. The computer looks at it exactly. But this is the lower end of the projection. And the Dow Jones Industrial Average reached the lower end of the projection 2 days ago. That did not happen with the S&P. And it's one of the reasons why you should be looking at least 2 or 3 of the main indexes. I was very disappointed to find out over the last day or two that TradeStation has again dropped the New York Composite Index. That is my favorite and most consistently accurate projection generator because it's all the stocks on the New York Stock Exchange. I started to look at that today and I said, where are the last few days? They were not there. So if you're like me, you'll call them up and complain that we want the New York Composite Index. I don't know why they took it away. But this is the reason why you look at all the indicators. If I had seen this 2 days ago, I wouldn't have been out and out bearish because we still have significantly higher projections, but I would have told you that because the Dow has met its nominal 10-week projection, this is the closing price projection, that this is probably an opportunity to look for some kind of pullback in the market. Is this going to be an important pullback? Well, because this is the last update, we're going to spend some time and show you what we're looking at here. So we're not interested just in this update. We're interested in this area right here. What kind of very short-term projections are we getting? Well, look, this is one we got today. We got it and met it and went slightly below it. For the Dow, 25,427 and 26,001 without the fractions on them. So that one has obviously been met. Let's go to the next longer one, 7 to 8 days. This one, as you can see, calls for 23,345 rounded off and 23,758 rounded off, okay? So that's a good ways down from here. This projection is confirmed, and the only way to invalidate it would be to see prices climb back above these offset lines up here. Not very likely, I would say, in the next couple of days after the huge decline today. This was a 7% decline today, folks. A big one, big decline. No getting away from that. So what else do we look at? Well, here's what becomes important. And I'm going to do this on the Dow this time because the Dow gives excellent projections also along with the S&P. I generally look at the S&P. But here's what you want to look at. You want to look at these projections, 23,345 rounded off, 23,758. So I'll write that down, 23,345 and 23,758. Now the next thing you want to do is to bring the next longer offset up. The next longer offset is 2.5 weeks for a nominal 5-week projection. And what happens when you do that? Here's what happens. Look at this. No lower projections have been given. But here's the important part. Remember, the projection's 23,345 to 23,758. So it calls for a move down to at least 23,758. That's right in this territory here. If we get down there on a closing basis, we're going to get even lower projections. So there are all kinds of possibilities here. Perhaps the more likely possibility is that we get some kind of rally tomorrow and then come and cross this line a little higher and perhaps get a projection down to around the same level on a closing basis with a Dow. Do you get what I'm saying here? In other words, if prices go immediately down to these levels tomorrow, if we close within the projection window tomorrow, then you're going to cross this line right about here, and very quickly you'd simply have to count 1, 2.5 spaces, 1, 2.5 spaces, and all of a sudden you're down at the 422 level. I don't think that's going to happen. If the projections say it's going to happen, I would trust them and not me. But I think it's more likely that you get some kind of rally tomorrow so that when this line is crossed to go down to the actual projections from the nominal 20-day projections, that's the 7 to 8 day offsets, that you might get around the same projections from these 2.5 week offsets. So I hope you're getting a feel for this. This, to me, I've looked at these things for 50 years now, folks, so I'm not a neophyte. That doesn't mean I'm right all the time. I'm the last guy in the world that would claim that I would be right or that the projections would be right all the time. Cycles are always interacting in the marketplace, and sometimes some of the cycles can change what would be a correct projection into an incorrect one. For example, if you have a very short-term projection down to here and a longer-term cycle has just started up, it may buffer that downside a little bit. And those are the times when you see projections being missed by a little bit. There's so much involved with this procedure, so much I would love to discuss with you, but from now on, these are going to be paying updates, and I think they will be well worth your while. So I would ask you to go to our website, stockmarketcycles.com, look at the possibilities there. You get, again, a 14-day free trial for these video updates. You get to watch them for another 2 weeks. Decide whether you want to buy the updates, to become a subscriber to the updates on a monthly basis. That's basically where we stand. I want to thank you all so much for watching over the past 9 months. We've made a lot of friends. I hope we've garnered a few fans, not for me, but for the cycle projections. If you have something good to say, this would be a great time to say it in terms of the last free update that we do. I'd love to have 75, 100 great comments saying thank you for all the projections, the cycle work that you've shown us over the last 9 months. You do what you think is right. I know there are going to be some naysayers out there. We still get them. You don't know what you're talking about. I told you the market was going to go down. We got one of those guys today. I told you were wrong and the market was going to go down. I don't know why I was wrong. I told you yesterday that the market was vulnerable short term because we finally had a lot of bulls. And the put-call ratio, for those of you that follow that, is one of the lowest of the last 5 years. So there are negative things out there. You have to watch the market closely here. That's why if you have the projection software, you know, I won't tell you know exactly what's going on, but you're going to know what's going on better than 99% of the people, including the professionals who follow the market. Thank you so much for following us over the past 9 months. We hope you continue to do so on our website, and I wish you all greatest trading fortune and good health. Avoid the virus, and God bless you all. Thank you so much.